John Ulzheimer is known as one of our nation's most recognized credit experts. Having worked for 28 years in the credit industry, John has become one of the most prolific speakers about credit and the go-to authority on answers to credit-related questions. Credit Countdown with John Ulzheimer.
Hello, my name is John Ulzheimer, and I'm a consumer credit expert. I have spent time with both FICO and the credit reporting agency Equifax, and then decades of concurrent work with a variety of other credit-related entities. In today's vlog, I'm going to explain the interaction between FICO and the credit reporting agencies. And there's a lot of confusion with respect to how FICO relates to the three credit reporting agencies, Equifax, Experian, and TransUnion. There are people who believe that FICO is a division of the credit bureaus. There are people who think that FICO is a subsidiary of the credit reporting agencies. There are people who think that FICO is a government entity. I'm not sure where that comes from, but nonetheless, I have seen that. FICO, my former employer, is a publicly traded company, just like any other publicly traded company. Pepsi, Coke, Ford, they just happen to be the company that invented what we know as the credit scoring model. And their credit scoring systems are very commonly used, and we all know them as FICO, FICO, even though their corporate name is Fair Isaac. We know them by their acronym, FICO, Fair Isaac Corporation. Actually, if you go to FIC, you can buy FICO stock. You can buy stock in the company if you like they're publicly traded. FICO, they do a lot of things, but what consumers know them best for is their work with credit scoring systems. And so when you go out to apply for a loan or a credit card and your credit reports are accessed, it's very likely that a credit score is going to be calculated on that credit report for the lender to use as part of their risk assessment process. And it's also very likely that that credit score is either going to be a FICO developed score or a Vantage score developed score. So that's where you run into FICO. You run into FICO scores when you go out and you apply for things. FICO's scoring systems are embedded at the credit reporting agencies. And so one of the questions that I get often is, well, how does FICO calculate your score? FICO doesn't calculate your score. FICO is not a credit bureau. They don't maintain a database of consumers' credit reports like Equifax, Experian, and TransUnion do. If you ask people to kind of draw on a line chart or on a kind of a chronology of events that occur type of drawing, how your credit score is calculated, you'll see a lot of interesting concepts. You'll see credit report is generated by a credit bureau that magically zipped over to FICO. FICO calculates the score and then magically zips it back to the credit bureau, who then gives it to the lender. Or credit bureau generates the credit report, zips the credit report to FICO. FICO calculates their score and then sends it to the lender directly. So neither of these is what happens. In order to calculate a credit score, you have to marry two things. You have to marry a credit report with a credit scoring model, all right? And when you marry those two things together, the product is a credit report that includes a credit score. So you have to have both the credit report and the scoring model in order to be able to calculate a score. Well, because FICO is not a credit bureau, they don't maintain your credit reports. Equifax, Experian, and TransUnion are not FICO. They didn't build the FICO score. They didn't build the FICO scoring model. Therefore, they can't calculate your FICO score unless FICO installs their scoring systems in such a way that they either reside on the credit bureau's mainframes or that the credit bureaus otherwise have access to them. Essentially, from a production perspective, gives the credit reporting agencies the two pieces necessary in order to calculate a FICO score: the credit report and the scoring model. And so actually it's the credit bureaus that calculate your FICO score and then deliver it along with your credit report information to lenders who pull that type of information. Another kind of common relationship, you remember the old Intel Inside commercials where Intel would have the chip and the chip would be inside of your PC, which was built by somebody else? Kind of like that type of relationship where you have a credit report and then you have the FICO inside, or that's where the score actually. This makes the process much more efficient because it reduces the number of hands that have to touch a credit report before it is delivered to a lender. So now if a lender were to process an application, for example, let's say you apply for a car loan and you want to get the car loan from a credit union that you do business with, and the credit union pulls a credit report from, say, Equifax, and they also want a FICO score based on that, then they also can get the score from Equifax as an add-on product in addition to the credit report. And they're probably going to be charged an additional fee to buy the score. Think of it, if you're buying a car, you have to pay extra for the leather interior, or if you're buying a car, you have to pay extra for the high-end sound system. It's kind of like that. If you buy a credit report, you have a cost for the credit report, and then you have an additional cost if you buy the features. So one of the features would be, or an ancillary product would be a credit score. What this allows for is very efficient delivery of the credit report and the score, because now you're only going to one place to get both. The delivery is coming from one place. The deliverable includes the report with the score, and so it's really one-stop shopping. And then when you get a bill at the end of the month, you're getting charged for everything kind of bundled together. And then the financial relationship between the credit reporting agencies and FICO, that's something that the bank doesn't even need to worry about, because that's something that those two companies have worked out with each other. When you go to a website and get a credit score, for a FICO score, for example, from your credit card issuer, the way that works, and FICO has a program called Open Access, where there are countless credit card issuers and entities that now have permission to give FICO scores to their customers. And so if you have a card with Discover or Amex or Chase, I believe, maybe not Chase, Chase may be a Vantage score. I know at the very least Discover and Amex, the relationship does include the ability to get a FICO score. And so those scores are the ones that those credit card issuers are already buying for other purposes. And then there's now getting an additional secondary use of that score by being able to provide it to their customers. So in those scenarios, the score is already being calculated. It is already being delivered to the bank for their use. And now there's just this ability to provide it to the consumer as part of FICO's Open Access program. So that's the relationship. Of the four parties that are involved here, Experian, TransUnion, Equifax, FICO, three of those companies are publicly traded in the US. The only one that isn't is Experian. Experian isn't publicly traded in the United States. But the three other companies, Equifax, FICO, and TransUnion, are. So hypothetically, if you wanted to buy a piece of any of those three companies and you have a brokerage account, you could go do it right now. So thank you for watching. I hope you learned something. If you have any questions, leave them in the comment section below, and I'll do my best to answer them. And have a great rest of your day. Thanks a lot, y'all.
For more videos and credit tips from John Ulzheimer, go to www.tradelinesupply.com.